area of demand, but from on the surface, you would think this is a turning point here for the markets. We made a peak, we then made a higher peak. We've got the trough in between, and we've breached that trough towards the downside. So now you would think that reversals or markets moving back up should be met by sell demand. Yes, that's actually what's happened here. Over the last 24 hours, we've kind of changed the configuration on so many of these markets. Let's have a look at gold. So gold hit our testing demand down here. It was actually a really nice little trade in there. If you'd had the conviction to go with it, there was actually a really nice little buy in there, and it's bounced straight back up. Now, for it to go realistically long, it's going to need to take out this 1680 plus level. And at that point, you'd think pull back again, going towards the long side. For now, though, gold is sitting in an interesting zone. I don't think there's any particular trade here yet for gold, but I really like some of the setups that are happening from a technical level moving forward. Where there are potential trades, though, could be the euro or, of course, the dollar index. As we saw before, the dollar had broken through. I'd like to see the euro take these highs. So this is the previous little wicks here sitting at 98.14. And then you'll notice that I've got like a line coming through the middle of this structure. Most likely, if the euro does take this kind of level, usually from a technical standpoint, the market will come back and it will react off that middle structure where orders can sit in these markets. And this would be a very interesting level, obviously, for seeing turnaround stories around this little particular area. So yeah, the euro is on the precipice of a real turnaround story against what a lot of people are going to believe, which is going to be, a strong dollar, weak euro situation due to all of this inflation stuff. Markets can be very fickle. Do want to take out this level first though, so that's around that 98.16, then pull back, and we'll update you as this happens. It might be 1 or 2 days away in terms of that type of thing. Even oil bounced off that secondary demand zone. We had this one here and this one here. We saw it come down, it hit that, and it instantly bounced, and it moved pretty heavily up. I'd like to see oil now decline, but this is a first really significant turnaround for oil. Pullbacks into this structure again could be met now by buy demand, and you could make a bullish case now for oil, at least in the short term. Oil loves yields, and if yields are going up, oil loves it. I've long suggested or thought about oil going down overall, and of course I still stick with that plan longer term. Remember I was talking about this at 120 a barrel, but realistically for the short term, as these yields are spiking, oil tends to do well. When the yields start dropping, watch out for oil. Oil will usually drop at that point. Let's move over to the stock market now, and Tesla was probably one of the better trades through the session. We actually saw it take the lows of the previous points over here, and it took them and then instantly rallied straight back through that. Now, it hasn't gone to some key levels yet. We can see we've got a little alert here for it to break past that high, but I'm kind of suspicious of this move in some ways through stocks, and I'll show you through a whole bunch of stocks now why we might be looking at a ramp into a potential short. So if you take like the structure of this area, most likely kind of one of the key levels sits around here at that 240. So I could see Tesla, I could see stocks ramping here and moving into filling some of these gaps, and potentially at this level having a little bit of weakness. That was a previous demand. It was a previous little bit of buying. You could actually see it hit this and actually sell off. And this comes through quite a lot of stocks. Let's have a look underneath the hood. You can see here, it opens on that level, takes it, and then starts to ramp up. We're now entering the first level of structure, but this level holds a gap close as well. And you're going to see a gap close on quite a few stocks, all very similar levels. Here's Apple. It finally entered that bottoming wick that we saw, the demand from previous, and it just bulled. It went massive on the session. It was a very, very strong stock. Again, for Apple, it's that 145 kind of area, 148 area that holds that issue point for this particular stock. So will they ramp in? This is one of those more touched zones, probably one of those more traded zones for this particular stock. Microsoft actually did the business. I'm sure a few of you were looking at this stock. It hit that zone. It absolutely slammed it. And it just opened straight on that trend line and just bulled and bulled and bulled. I'm not sure what the percentage was for the day. Let's have a quick look here together. But it was a fairly significant turnaround. I mean, 7.26% on the day from that key level at Microsoft. So it does show you that setting up and being patient on the key levels can matter. We hit a 3,500 on the S&P. We hit Apple at that demand level. We had Tesla taking the lows. We had Nvidia taking the lows. We had so many stocks realistically sitting on these critical zones. So maybe it was due for a bounce. Now, during the time, it can be very difficult. It's hard to have stop losses at these kind of levels unless you know exactly what you're doing with these swing points. And yeah, even Nvidia bounced straight back above that low. Does this mean that there's not more pain to come? Absolutely not. But you could see that this could squeeze for a couple of sessions. And we'll talk about the pullback and the squeeze stories very soon as we go through the markets. Let's look at the one that basically slapped me in the face with a bunch of alerts, and that was the UK 100. It was super important for the FTSE to hold this zone. Demand, 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 or support. You could see all those buyers coming back in, and it took the low and just went boom, straight back up. Very interesting. You'll see I've got an alert set here at the 71 kind of 20 level. And the reason I have that is because this could become like a double bottom or a basing pattern. It's possible. More likely though, the market will come up here and it will start to have problems and potentially sell back off. This is the games that markets play, but that's a big wick, and that saved what could have been a critical crash. The close is the key, guys. By the end of the day, if this thing had closed red on its lows, I'm telling you, from my perspective, any rally was going to be met by shutdown demand. It's that important with the closures, and this close had a giant wick. And it's the same story through a few of the markets. In fact, the European markets barely struggled through the session. You can see here the DAX didn't really care. Big volume coming back in. It just went kind of long. It's looking okay. I guess the DAX is not looking negative. But let's now talk about the US markets. Now, here was the interesting one. We actually filled and we hit quite a lot of levels here on the Russell. The Russell sold off aggressively, the small caps, but it actually didn't make a new low. It held the base. It held the lows here, and it just went bang straight in, taking out that alert that we had at 1711. And it again looks relatively bullish here on a chart. If you take a look at this big bullish candle. We saw 3 dojis. The market took the low. It came through, hit the base, didn't make any new point, and just went boom. This is now 1, 2, 3 times it's held this level. So it's going to be worthwhile setting an alert underneath here, because that's probably where you're getting that capitulation selling that's going to push stocks well under. If we take these lows now, you just know that they held so much demand in the past because they bounced so many times that if they get taken, it's going to be significant. It's just like with the FTSE. When the FTSE had closed underneath, significant stuff would be in store. So it's going to be interesting to see how the market reacts. You can see at the time of this recording, they're still ripping up. I could see it rip pretty strong over the next 24 hours, potentially hit into this little supply here and then have some issues. But I want to use the Sp500 the most with this. Here's the NASDAQ. It came off the secondary level. So if we scroll out here, we need to probably go with daily. You can see those wicks that were formed back in July of 2020. We found initial buyers in this box. We found the bigger buyers, obviously here. They've come back through, and we still have a lot of unfilled kind of zones here. So if we look at the NASDAQ, you'll notice we have unfilled gap sitting quite far above. So here it is, 11,489. Is the market going to do some kind of ramp, hit this level, pull back into a structure around here, and then we find out whether the buyers are really ready to recommit? This is definitely a leading concept or theory that I'm playing on here in the markets. If you consider the US 500, as we move over to that, it's a similar thing. Where's the gap? Well, the gap sits around 37.40. We'll just quickly grab it from here, 37.44. And you should have those marked on your chart. So 37.44. Just so happens that's also our box zone, because we know that that's where the non-farm payrolls result came in. So the market seems to be trying to squeeze this number. If it can squeeze into this level, this could be where the sellers recommit to the markets. So, of course, if you're thinking, oh, well, I think this is ridiculous, this market can't ramp. Well, remember, markets can stay irrational longer than you can potentially remain solvent. Practice your risk management, guys. But markets could come into this level, and this could be a turn point. And I think if it does turn, the most likely level that the markets then come back down to is somewhere between this 30, kind of 580, to 3,600. And this both means that there's two very significant levels moving forward. We've got that potential supply throughout this box here and maybe just this level. We fill a gap, we push that squeeze, then we come back down and we find out whether the market really wants to go bullish or not. This level here could be a very good kind of trade day. There's two cool trade days from a technical potential perspective. So very, very nice kind of movement here. Even though it looks insane, I could still think that there's some method to the madness. That would work with the dollar index as well. We see that initial kind of movement against the DXY. Then we see maybe the DXY continue to strengthen after now it's broken through the lows. As that strengthens, it pushes through, and then we get the reversal on the DXY because they're interlinked, they're interconnected, these markets, to a degree. Let's have a look at Bitcoin. It was it was down to the wire. I mean, I laugh because, you know, this zone has just been so consistently bullish, and it really almost got destroyed. You can tell that it was just on the precipice of getting messed up here in terms of Bitcoin. If it had fallen through that 17.5 or 17, maybe even 18,000, we have to worry about that level. If that happens, watch out down below, guys. You know, I've always said it, negative 83 to 86% here is what my expectation is from top to bottom for Bitcoin. I'm still not overall long-term bullish on it just yet. I mean, you could make a case for it, I understand, but here's the rally, and you can see that there was a lot of structure through these previous points. So if it keeps rallying with the stocks, which I'd expect it to do so, if it then turns around, it's a similar story for Bitcoin. A pullback with the stock market after hopefully the stocks hit that supply level, or they hit that resistance, fill the gap, and then we move back down into this level around here, which sits between around that 19,000, 19,250. I'd love to see Bitcoin move up and then come back down to that zone to see if it can have a nice reaction there. For the news ahead, yeah, there's still more to come. As you can tell here, it's always good to have a calendar just so you can see the forecasts, the forecast 8.1, the reality 8.2, the forecast 0.4, the reality 0.6. And we move in now to the core retail sales and the prelim UOM sentiment. 1 hour before the New York market opens, that's 8:30 a.m. New York time, and then we move into the weekend. Now remember, guys, on the Sunday we have the CCP meeting. Unfortunately, this is now going to become a big story. What do they do? Do they reverse? They've got COVID cases in Shanghai again. I think it was like Golden Week just happened. There's a real case for shutdowns and lockdowns. They could spook the market. Remember last time we ramped into this news? Remember that? We ramped into all of this COVID infection. Then all of a sudden they shut down and the market just tanked. So you've got to be very, very, very careful here. Be nimble and fast. As always, if you're interested in finding out more about the sponsor of today's video, which is Tiger Brokers, definitely check them out, guys. There's a whole bunch of links in the description with some special deals. I believe for the Australian and New Zealand audience, you get an extra bonus for being part of the FX Evolution community, 40 free zip stock when you fund the account with, I think, is little as 1 cent or greater, and open it very, very soon. Thanks so much for watching, guys. Remember to subscribe, smash that like button, and we'll see you in the next video. Bye for now.